So, hello everyone, thank you and welcome to our technical analysis webinar with Trevor Neal. Before we begin, I just want to remind you that this will be about 30 to 40 minutes long. Well, we'll aim for it to be approximately 30 minutes. We may spill over by about 10 minutes or so. Also, just to remind you that if you have a slow internet connection, it might be better for you to dial into the webinar. You can find instructions how to do so in the email you received after registering. It's better if you don't really have a very good internet connection. You can hear everything better. So Trevor Neal will be presenting the webinar today. I'm sure you already all know Trevor very well, but you can read his bio in 8 languages via the link we sent you in the confirmation email. But just to give you a brief introduction, Trevor is a veteran trader and technical analyst starting way back in 1974. Just a couple of his greatest hits: worked as a global head of technical analysis at Bloomberg in London and managed a large hedge fund in South Africa. Nowadays, Trevor is mainly passing on his skills via educational material like webinars, tutorials, and mentoring programs. Before I pass over to Trevor, if you do have any questions to ask him, please do so in the questions tab on your GoToWebinar tool. I'm sure you all know how to use it by now, but if you want to ask a question, you need to ask it in there, and I'll see it and I'll pass it on to Trevor. Please keep the questions on topic, and if we don't get round to answering all of your questions, please feel free to send them to webinar@myfxchoice.com. So, Trevor, what do we have this week? I know that we're going to be discussing the new share CFDs that we offer at FXChoice. I think Microsoft, is it, that's caught your attention this week? I think.
Yes, indeed.
Microsoft. What else have we got? We've got I know that you're very excited to show people a reverse head and shoulders pattern on a GBPUSD chart, and we're sure we're all looking forward to that. Silver outpacing gold. Trevor, take it away. It's all yours.
Okay. All right. So let me get back to the Euro chart here. We're going to start with the currencies. Thank you very much, Dan. Thank you very much, everybody. And yes, questions are welcome. Please put them in the chat box, and Dan will present them to me as we go along. So let's start with the euro. Let's start with the euro, not the dollar index. So last week when we were talking, we were looking at the market hesitating underneath this important, what had been a support line, and we broke down from, failing to reach the objectives that I thought it would get to, and then come up, retested from the inside, and it could have at that time been rebuffed by the resistance line, or as it seems now, from Friday's move, it has surged ahead and is moving back inside this range here. It's got a lot of resistance above it now. It is a good move that's taking place, and let's just dissect it. We're trading at the 50-day moving average. We've crossed and closed above this line, this very clear line here at 118, and now this puts us back into the range which held us for about 6 weeks in August and the first 2 weeks of September, and extends right up to 119.70. So this wide band of relatively narrow, really, resistance, and we're punching into it from below, and it looks as though we're going to settle inside it. The indicators are looking positive, so we should continue to go up, but I think the problem for a trader is that there's a big band of resistance ahead of us here. So though it looks bullish and it's trying to do it, it's going to struggle, I think, to make it through this quagmire of resistance. It's a quagmire. Why? Because so many people bought and sold for 6 weeks at a very similar prices as it oscillated up and down through this range. There'll be quite a few longs remaining from August and the beginning of September who will be pretty relieved to see the price up here, and quite keen to exit their trades at break even, and where they thought they were going to be suffering losses. So they're all sitting there. There are many of them. We know there are many of them because of the length of time it's spent there. So in a way of participating in this weaker dollar that we're facing, I think the background, I'm no economist or anything like that, but it seems to be the market is very worried about the election and the squabbling and the package for the coronavirus package in the United States, and this is capping the dollar at the moment. But I don't think that the euro is the best place to capitalize on it. Yes, it looks as though it is bullish, but I think the action is elsewhere. Place where there's no denying there's action is in the cable, sterling itself. Now, cable's a completely different chart here. I think it's an extremely interesting chart. Before we look at the daily charts in detail.
Sorry, can I stop you for 1 second, please?
Yes.
We've had quite a few people saying that you sound like a Dalek, and also there's something wrong with your sound. Can you check your microphone? I mean, I can hear you fine, but it seems that some people can't hear you. Is your microphone all on properly? I mean, quite a few people have said that there's no sound,
Okay.
or that there's.
Okay.
I can hear you
well,
perfectly.
I don't know. The microphone is connected, working, and it's the same microphone we used when we spoke before.
Yeah, a lot. Sorry, Trevor. A lot of people are saying I can hear fine. I can hear you too. I think it's just a couple of people that can't hear. Sorry for interrupting.
Right. That's okay. All right. Yeah. Okay. That might be an internet connection, and those people maybe prefer to phone, and they're lucky they'll find it's a toll-free number where they are. So I want to go back and look at the weekly chart of sterling, just to remind us of the big picture where we are. So this is what we're going to be concentrating on here. We are moving, I think, up towards a very important area for sterling, which could release a great deal of energy. The year's high was at 134.82, which was the same high. It wasn't a double top, because a double top is a special thing. We'd have to have broken down through this low here, the March low, but we stopped at the same place twice in December 2019, the same place. So we're close, and we're trading around that level. Of course, it's a place where we could fail once again, like we did before. But what is going on here? Let's look closely at it. So we've come down. We have hit support around 127 area here, and we've done it in a particular way. I bet you a few people here, and I'll give you a chance to show off a little bit. What do you think I'm going to say is this pattern here, chart pattern? What's the name of the pattern? And could you tell me, Dan, if anybody answers this? So we came down here, made a low, made a new low here, rallied to almost the same level, pulled back again, and then we've moved up. Has anybody identified what that?
Yeah, we've got head and shoulders here.
Yes, head and shoulders, a reverse head and shoulders, because it's upside down.
A reverse.
It's as if I was standing on my head.
Thank you, Kurt. Thank you, Kurt, for answering that.
Yes, thank you very much indeed. Well done. So what this is, for those of you that are not familiar with it, is we're making a pattern of a low and then a lower low. Now at that point there, cable felt very bearish at that point, because it was making a new low. Then it rallied, and then it made a very, very feeble attempt to go down again. So any idea that this was a sustained downtrend and we were going to get a further new low was very disappointing for the bears. Now, we've been trading in this range for about 4 weeks now, and we can tell from various sources of data, like the COP data in the States, but we've got better data than that from the foreign exchange market, that the market is pretty short of sterling. The view is that there'll be a hard Brexit, and it's going to be really bad for the UK. And many traders are positioned short and have suffered a lot in the last week or so as we've come up here. They're being squeezed on their short positions, but there still seems to be a lot to unwind potentially in this market. So it is vulnerable to shocks to the upside. Good news is going to hurt quite a lot of people. We're approaching the end of not the end of the negotiations, but there's announcements due on Thursday, for example, and we're getting to the final part of the game of the negotiations. Everybody wants it to happen, but it's all being very hard and very tough. I can't guess how it's going to go, but the market is positioned that it's going to fail, And if it doesn't fail, there are a lot of people that need to cover. This could unleash a great deal of energy. Now, as a chartist, we've got this reverse head and shoulders pattern, low, lower, low, higher, low. This line here that I've drawn in here is called the neckline. And the neckline is a line joining the left shoulder and the head, the high in between, the head and the right shoulder, the high in between, that's there. And we've broken that. The idea of a head and shoulders, this is an upside down one, but you can have it equally the other way up as well, is breaking the neck. It's ending the pattern of falling prices, and this is the neck. This is the trigger of that often releases quite considerable amount of energy. We broke through it with a very nice bar, nice big candle finishing near the high on Friday, and then today so far we're following through. Classically, if you're a classical chartist, we would measure from the head to the neckline, that number of points there or percent there, and swing it up here, and that gives us this minimum price objective of that. I resist using the word target because excuse me, because very often we go beyond it, but this is where I expect it to go. To 133 is where I expect it to go, and I'll leave that on the chart now, and we'll see what happens next. Often when we do break out, we do retrace back to the break point, so 130 again, 130.20 to be precise. Again, that could happen, but sometimes we just go straight to the minimum price objective. But you know the importance of this level here and the previous level, the same level before. And above it, really, there's only blue sky for it. So potentially, there could be a scramble to cover, there could be relief, there could be many people wanting to get into positions if the news comes out good and positive for sterling. If it doesn't, then it seems that because of the positioning of trader, and if, let's say the talks break down completely, it's very disappointing, very crushing, but that is a large part of that is priced in. Yes, we'll have a sharp sell-off at the time, but then I think a lot of it is priced in, and there are many people who are in a position to take to short cover if the news is bad, and so there are many potential buyers out there. So the chart is looking good. The RSI is rising nicely. We've moved the other side of the 50 period moving average. This is a 50 period moving average here, and you'll see on my charts there's also a 200-day moving average, but that's down here actually. Here is the 200-day moving average, which has actually acted as very good support here and very good resistance here, although we're breaking it here. Now, another thing we should look at is the relationship of sterling, of cable versus the euro. I'm sorry, this is not labeled. I don't know why. Let me just see if my label has moved. This keeps happening quite annoyingly. No, it hasn't. But look at the weekly chart of this here. So this is the weekly chart of sterling versus the euro. So a rising value is an increase in the value of sterling. So this is us pushing up here. I'll go back to the daily chart here, and we're pushing ahead rather nicely. I've drawn this little channel in here. We've got at least 3 points on the bottom and 2 points on the top, and I think we're headed into the upper end of this channel around 112. There is considerable resistance here. I've got to acknowledge that. I put a big circle around this resistance, this big trading that took place around between 11 and 12. And so we are moving into resistance here. So the best potential is from sterling itself. Second best, if you want to participate in this from this way round, is sterling euro. Third best is the euro itself, if you want to participate in the weakness of the dollar. I want to follow up on. Yes, go ahead, Dan.
On the GBP JPY, it's actually Kurt again, the chap who answered the question before. He says, I'm long GBP JPY, I'm long British pound Japanese yen. How would I correlate it as far as a target?
I'm going to ask you to say the second part, the last part of what you said. So he's long of GBP Japanese yen. That's good. Yes. And then he said what?
How would I correlate it as far as a target?
A target?
Yes.
A target. Okay, so I think he's saying where is the target on it? Well, again, here we've got a reverse head and shoulders, which he's probably noticed himself. Let me draw the neckline in it here. So here we had a low, lower low, higher low. It's got a steep line, rising line here, but we're above it. We've got resistance here, here, and very light resistance, at the high here. So I think the bigger problem is to get through this resistance here, which is around 38.50 to 140, the big number 140. But then if it clears that, then I think it will have no trouble taking out the high, because the resistance at the high is quite light. The RSI is constructive in it. The MACD is positive also, and I think that this is a good one, and it's a good choice to go with the yen. So I think it's a good position you've got there. I believe. I hope I've answered your question. Perhaps you could let Dan know if I have answered the question.
Thank you, Kurt. Sorry, Trevor, continue.
Okay, so here we've got the Aussie dollar. I wanted to follow up on this from the last time. It's held up well given the volatility and the softness in oil that we saw during the week. The Australian dollar, I think, is probably now beginning to benefit from the bull market, which is going on in grains, something you may not notice, but have a look at a soybean chart and a wheat and a corn chart and meal and oil. They're going up very strongly indeed, and that's very good for Australia. So it's pushing up strongly after having made that low in September. It's got short-term support at 72 here, which is being tested today, and that should be enough to hold it. It meets light resistance at the August top, which is at 74.10 here, but that is light resistance. Then if we look at the weekly chart, we'll see where the next resistance is, which is at 75. So here we are here. This is what we're up against. So this looks bullish. It looks as though we're heading higher, but it's heading towards resistance, I would say, starting at 75 and extending up. Sorry, I didn't mean to draw a rectangle, but extending up to 77, 78, really there. So I think it's bullish, but it's got quite considerable resistance ahead of it. It's trading at the 200-day moving average, and is that? Go back to the daily here, and it's trading above the 200-day moving average. It's trading at the 50-day average, I should say, and which is still generally pointing higher, which is bullish. So I think it's bullish. I don't think it's going to have too much trouble with this top here. But then it's got a lot of resistance above it, but it seems to want to go up. We've got what might be a bearish flag if we take out this lower line here, so watch out for that happening. Let me just expand this because you may not be able to see it very well. Just make it bigger. And so we've got this flag. Here's the flagpole. Here's the flag. And so watch for a break of that, because we could have another leg lower. But at the moment, it looks it wants to go higher, and it seems capable of taking out that September high. I'm going to move now to gold.
We've just got a question to squeeze in.
Yes.
Craig asks a question. He says, I'm new to this conversation. How do you simply define resistance as you look at the currency direction?
Okay, so resistance, if you substitute the word supply for resistance and for support, demand. So this is a resistance level here because gold went up and the bulls were in charge, but at this level here, exactly here, the bears overwhelmed the bulls and we sold off here. So we can say that with the benefit of hindsight, at this price here, which was 2069, the bulls lost control to the bears. Supply came in and overwhelmed the demand, which had been in control of the market here. So that's the definition of support and resistance. Now, strong support and strong resistance is, if we look at this level here, 1, 2, 3, 4, 5 times it held. So the level was reinforced 5 times. Demand came in, stopped the falls again and again and again, 5 times. So we technical analysts would say this is strong support, because it has been tested several times and has held. This is why when we do break, often the sell-off is quite fast, because as it gives way, people who have been buying it here, and it hasn't been lower than this price for all this time here, about 4 weeks. So anybody who's bought it recently is losing money, and this causes this kind of sharp move here in disappointment there. Also relief for the bears, because the bears have been saying this is going down, this is going down, but it keeps bouncing, and then at long last it breaks, and so they can sell. Now this pattern here, I think in gold, is a descending triangle. We've got the lower highs here. In my shorthand, I draw dashed lines. I draw resistance lines when I can. I draw them in red. Support lines I draw in blue. And the red lines are in this case is dashed because it isn't a properly drawn line. We have rules for drawing lines as technical analysts, and if we're going to use them for trading, it needs to be drawn properly. But what I can say here is we've got a high, a lower high, a lower high, a lower high, and a lower high. So it's the series of lower highs. They're not lining up, so I dashed the line. But we got these lows here, and they are lining up, so I make it solid. This one, I drew it in but made it dash because it's only got 2 points on it. 3 is the minimum. I haven't got time to teach you all about charting, but that's my shorthand to remind me that this line here is not a line I can use for placing stops or anything like that, because it's not properly formed. But this one, when it was broken on the downside, when we came up, whereas it was strong resistance before, became support before, it became resistance, and it did rebuff us here last week. But then late last week, we surged strongly here, and this was fantastic. So we've now moved into this descending triangle, and it could be that we're breaking up out of it. We have got this big consolidation here, but because of the lower highs pattern, I think that we might be on our way up. But the problem is, this again has got a lot of resistance. A lot of people around who at this price and higher will be willing to sell it. This is a whole group of people at this price, around this price here, that are potential sellers in here. So it's going to be hard to move through it and get through that 2000 level and then go on to make new highs. It's going to, I'm not saying it won't do it, it's just it won't be fluid and easy. But I want to show you something, which is that if you are bullish, as indeed I am, but I notice the difficulty, the friction that's likely to be ahead. What I often do in this case is look at the gold-silver ratio. So this is gold divided by silver. So if this rises, this means that gold is outperforming silver. It's simply the price of gold divided by the price of silver. This here was silver outperforming gold. So gold was going down relative to silver, and we talked about that before. Now, what has happened here in this chart, we've got this descending triangle pattern. We've broken down here, and we're starting to move down here. Don't forget, this is not the price of gold. This is the ratio of gold divided by silver. And there's big support here, so I think that the gold-silver ratio will deteriorate further and until we get down to this level here. What am I saying is that I think that silver is going to outperform gold. And now the reason being is this resistance here is ahead of us. In gold, this resistance, the equivalent, let me just flash back to that chart of gold, we're right into it. So the selling is right here now in gold, but in silver, it's above us. So we've got a gap to fill. So this, I think, will be the catching up of silver in relation to gold. So if you're a flexible person, you might switch out, even though you're bullish at precious metal, you might look to try and catch this catch up that is looks like it's going to happen in silver. Silver was up 6% last week. Gold was up 1.6% last week, and that's because gold is hitting its head on resistance. Silver is not hitting its head on anything until it gets above 26 and really centered on $27. So I think the silver can go up further while gold struggles to make progress. And now moving to the US stock market. And what a market. I mean, it is amazing, isn't it? I mean, I've been around for a long time. I'm extremely old, and I can tell you I've never seen anything like this in my life. It is astonishing. This bull market is the longest bull market in history. So even if I was 100 years old, I would have never seen anything like this. It is awesome. Once again, what do you think I'm going to say here? Here we got a low, a lower low, a rally, and a higher low. And so what do you think? What's the name of that chart pattern? You should know it by now. Somebody else, I hope, is going to answer that question.
I'll let you know, but I think I know the answer.
Yeah, you've been paying attention.
Kurt's in there again. He's in there again. Kurt's got before everyone.
And he said it was
Head and shoulders.
Yeah, reverse head and shoulders.
Reverse head. You're wrong. Sorry. It's a reverse head and shoulders, not just a plain old head and shoulders.
Yeah. Don't be shy, everybody. You know, it's a chance to show up.
Actually, we do have a lot of people. It's just that Kurt got in there first.
Okay. Well, it's a reverse head and shoulders pattern, I think, and we've broken the neckline last week. Now we're surging up, and we're having gaps in the market. There are several types of gaps, and you know, when I teach technical analysis, I teach people how to differentiate them. But these ones here are not made by low volume. They're not a lack of interest or activity. They're not common gaps. These are breakaway gaps. These are extremely bullish technical messages we're getting here, and we're surging away. How far are we likely to go on the basis of this pattern? And just by the way, we're above the 50 and the 200-day moving average, and the RSI is pointing up strongly. I know it's high, but look how long it can stay high. Okay, so it's pointing in the right direction. It's not weakening. It's strong and getting stronger. Many of you will know on this call how you measure minimum price objectives. We measure from the head to the neckline. 4.5. So here's the half. 1, 2, 3. That takes us up to 3,600, just above the high. So this swing, on the basis of the pattern we've got here, I could put the minimum price objective in here, and I'll leave it for next time. And I hope I'm saying that. Let me mark it up. Okay, I'm going to leave that there for the next time we talk, and I hope that by the next time we talk, we've got there. It will be a new high if we have got there. The high itself is often resistance, because this is the level where the sellers overwhelmed the bulls, halted this dramatic advance which was in progress at the time, and we turned down. But it's not strong resistance, as a matter of fact, because it was very quick. This here, it was very quick. We were going up and then we were going down. Not much trading took place at that point there. We didn't hang around there for long. Therefore, there aren't many longs up here to be sellers here. If we had consolidated here, spent time here, then that would have left a large body of traders who were there to relieved to see it and get out of their long positions. They're not there. We were so briefly there, there wasn't long enough for them to get those positions. So I don't think that the previous high will exert much resistance when we get there, which I hope we're going to do. Okay, I'm going to do Microsoft now. So how do you participate in this? Well, many of the popular and big stocks are at new highs, and it's difficult to buy some things which are already so strong. But I look for something which is a little bit behind us, has not yet reached its high or through it, because many of them are already at new highs, and has got a good chart pattern. And you know what I'm going to say next, don't you? Here, look, what have we got here? Somebody else, tell me what this is. Low, rally, lower low, rally, higher low. What have we got here? I will demand that somebody tells me what this is.
Inverted head and shoulders.
Here's a reverse head and shoulders. Now, hopefully, lots of people now know what a reverse head and shoulders is.
Did, but I said the first one that came up. Thank you, Amanda. She said inverted head and shoulders, not reverse head and shoulders.
Right, you must correct Dan when he doesn't say inverted head and shoulders. So reverse or inverted head and shoulders. So here's the left shoulder. Here's the high in between the left shoulder and the head. Here's the head and the right shoulder. Here's the high in between the two. So I draw this neckline across here. We surged through it on Friday. No surprise that it's gapped higher here. It's trading very strongly currently. The high itself, I don't think will exert much resistance. I'm measuring how far we should go, and it takes us back to the old high. I measure from the head to the neckline and swing it up from the break point. It takes us to the old high. So I'm going to put that in there and keep that for next time so we can look at it. And I hope, of course, I don't know, because there's nothing in this business, and certainly the markets have certainly got a great cunning for and great propensity to humiliate you when you're overconfident. But I think that the market action is extremely good in Microsoft. I'm choosing it over other stocks because many stocks are already at new highs, and this has got some catch up to do, which it seems to be doing enthusiastically. I like the look of the RSI. I like the fact now we've crossed the 50-day average, which had exerted quite a lot of resistance. So we've now cleared that, and so it's looking good technically. So I think that this one could run there. Not to say it has to stop at the high, just minimum price objective. All right. Any questions for me?
I think no, we haven't had any questions, Trevor. No, there's no questions based on that. Thank you very much. Are you finished for the week?
I'm finished for this week, although it is only the beginning of the week, and of course there's plenty of time to make a fool of me between now and next week. But I hope you benefit from this, everybody, to get you thinking, to educate. I only have a short period of time, but I do appreciate the questions very much. And as I go along, I'll try and explain what I've got on this chart here. And over time, if you keep listening, you'll get to know all these indicators and how to put them together and how to read them. We can't do it in one session, but we'll do it over time. So tune in next week and then see whether I look silly or whether the market has done what I thought it was going to do.
Well,
thank you very much indeed, Dan, and everybody else.
Yeah, please join us again next week, the same time, same place. Also, we ask you to take some time to fill out the survey at the end of the webinar. It's actually the same questions as last week, but we've had a significant amount of extra attendees this week. So it would be really, really useful if you can fill that survey in for us, and we can use your feedback to improve our webinar. So thank you very much. Please take your time to fill in the survey, and we'll see you all next week.
Thanks, everybody. May the trend be with you.
Thanks, Trevor. Goodbye.
Bye-bye.